If your data lives in multiple tables, but your reports still look disconnected, you are missing one core skill: SQL Joins. In the next few minutes, you will see how simple joins turn raw transactions into clear, connected business insight. In real businesses, data is usually stored in separate tables instead of one big table. For example, transactions, customers, products, and accounts are kept in different tables to keep the system organized. This means important details like customer names or product information are not inside transaction table itself. SQL joins help you connect these tables together. This allows accountants and analysts to turn simple numbers into complete reports, such as linking tables to specific customers or matching expenses with products. With joins, you can understand the full story behind the data instead of looking at isolated records. There are different types of SQL joins. Inner join shows only matching records from both tables. Left join shows all records from left table and matched records from the right table. Right join shows all records from right table and matched records from the left table. Full join shows all records from both tables, whether they match or not. Each join type controls how much data is included in the result. Choosing the right join depends on whether you want only matched data or all data for reporting and analysis. The image explains SQL join syntax and shows how inner, left, right, and full join work when combining two tables. Each join type controls which rows are included in the result based on matching keys between tables. In simple terms, inner join only matching from both tables. Left join all rows from the left table plus matching rows from right table. Right join all rows from the right table plus matching rows from the left table. Full join all rows from both tables matched where possible joins can be understood as overlapping circles. The more overlap required, the fewer rows you get. This visual helps make SQL joins easier to understand. The join works by matching a common key. In our dataset, customer ID connects transactions to customers. Product ID connects transactions to products. The on condition defines the relationship. From a business perspective, this transforms raw accounting entries into meaningful business intelligence. Instead of just seeing sales revenue for 35, we now see which customer generated that revenue and which product was sold. This is how finance teams support decision making. Common patterns. You can join more than two tables by writing multiple joins one after another. After joining tables, you can use where to filter the data in group by to summarize it, such as grouping results by customer name. Inner join returns only matching records from both tables and is commonly used in financial reports. Left join is useful for checking missing data such as transactions without valid customers. Joins are important in accounting because they help with reporting, data checks, and accurate financial analysis. This query shows sales transactions along with customer name for each record. It joins transactions table with the customers table using customer ID so the system can match each transaction to the correct customer. It also selects transaction ID, date, customer name, and amount. The condition where account type is income ensures that only revenue transactions are included. This helps accountants quickly see which customers generated the sales whether without manually checking records. It returns raw accounting data into a clear customer based revenue report. This query calculates total revenue for each product. It joins transactions table with the products table using product ID. So each transaction is linked to its product name. Then it uses sum of amount to add up all revenue for each product. The condition account type is income ensures only sales transactions are counted by using group by product name. The results show revenue per product. This helps management understand which products generate the most sales and supports better business decisions, such as focusing on high performing products. This query shows total expenses for each product. It joins transactions table with the products table using product ID. So every expense transaction is linked to its product name. Then it uses sum of amount to calculate the total expense per product. The filter account type is expense ensures only expense records are included. By grouping results by product name, the report shows how much was spent on each product. This helps finance teams understand costs, control spending, and analyze profit margins more effectively. This query checks for transactions that do not have a matching customer. It uses a left join which keeps all records from the transactions table even if no matching customer is found in the customers table. If the customer does not exist, the joined fields will be null. The condition where C.customer ID is null filters only those unmatched records. This is useful for data checks and audits because it helps identify missing links, data entry mistakes, or incomplete records in the system. This query shows total units purchased and total revenue for each customer. It joins the transactions table with the customers table using customer ID. So each sale is linked to a customer name. Then it uses sum to calculate total quantity and total revenue per customer. The where condition keeps only income transactions in group by organizes results by customer. The having class filters customers who generated more than 500 in total revenue. This helps identify high value customers and supports better business planning and customer management. This query shows how each product is related to different cash flow categories. It joins the transactions table with the products table using product ID, then calculates total amount for each combination of product and cash flow category by using group by product name and cash flow category. The results are organized into separate totals for each product under each cash flow type. This helps accountants analyze financial activity in a structured way and understand how transactions are distributed across my operating, investing, or financial categories. This query creates a complete report by combining customer, product, and transaction details. It joins the transactions table with both customers and products tables using their matching IDs. The result includes customer name, product name, account details, quantity, unit price, and total amount in one view. This type of query is useful for management reporting because it brings all related information together in a single data set. It helps build data dashboards and business reports by turning new accounting records into organized, readable financial information. In this lesson, you learned what SQL joins are and how they help connect data from different tables. You also saw the difference between inner join and left join and how to combine transactions with customers and products to create meaningful reports. Joins are useful for revenue analysis, expense tracking, audits, and better decision making. They turn separate accounting data into clear business information. Practice using joins with different filters and groupings to improve your skills. And in the next lesson, we will build more advanced financial reports using joins and aggregation. Thank you very much.